Welcome to the Real Estate Show on KMED. September 24th is our date. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about, well, all sorts of real estate topics and issues that we can think of and people bring to us the week after week now for over 7 years, right here on AM 1440 and FM 106.7, right? Hey, you know that kind of thing, yeah? That's not going to work. You got to go to the other one there, Joe. Sorry about that.
This is the good mic.
Is that the good one? All right. Good. Anyway, hey. Yeah.
I'm still petitioning for our listeners to get 1 hour of real estate continuing education credit for every program that they listen to. That's how good of some of the guests and materials that we are bringing on a weekly basis.
Or if you've listened to us for 7 years, you should have it. You should deserve a real estate license, right? Or something like that, maybe.
You'd be well down the road to understand how it all works.
Well, anyway, today here on the show, we're going to talk a little bit with Guy Giles from Bank 34 Mortgage. You know, Guy is our resident mortgage lending expert. Nice to the show. Welcome to the show there, Guy. Nice to see you again.
Hey, you guys too.
Where you been? Having fun all summer? Or?
Oh man, we got out and did a few fun things this year.
You did?
So yeah, out riding some quads this week and heading up to the lake. Trying to get there before the snow flies too bad.
Well, it's a little snow flew this week, you know, so you may be quicker than we thought.
Thursday morning, Pete saw flakes already up the hills.
So tell me a little bit, what are rates doing right now, just generally overall? If because it seems like, you know, the market has not slowed down, you know, too much here in the fall, and things seem to be rolling along. So it's got to be, it's all tied to interest rates. I don't care what anybody says if it doesn't. So how is that going? What are they this week kind of thing?
Man, they're still flat. You're still looking around the mid threes for conventional loans, and we're assuming, you know, decent credit, and really low threes for your government stuff. So they haven't moved a ton. I don't really anticipate until something settles down with this election that really anything's going to happen, but the stock market's going to continue to go up because they love gridlock. They love the markets anyway.
Turmoil is the word that's used a lot.
What a great system.
Kind of thing.
Yeah. Well, the big thing is they know if the Democrats or the Republicans, neither of them can really move, that they're pretty safe, knowing that no major policies are going to get changed. Right. So markets tend to love that. So I guess we'll have to see what happens in November to see if one party takes control. Right.
Interesting thing is we are September 24th. November 8th is not that far off, is it?
No.
It's actually coming along.
It'll be done soon.
I wanted just to give you guys, talk about, you know, interest rates, and I printed out this 30-year, you know, mortgage history of rates, and how, because we always talk about, you know, back in the day, you paid a lot more, you know. So I'm gonna quiz. I got a question for Guy, and Cheryl too, by the way. And Cheryl, we haven't said hello to Cheryl yet. Let's say hello to Cheryl. Joe, you got to share that. Cheryl Malone is a longtime broker with Windermere Van Vliet. How are you doing, Cheryl?
I'm pretty good today. How about you?
Well, you know, good. How's business with you? What have you been doing this summer since the last time we saw you? Have you? I mean, sales? How in your office? Tell me what's going on there.
Oh, yeah, still a lot of sales going on with a low inventory, and a lot of people, you know, choosing this location to retire, and it's just kind of the best of all worlds here, it seems like. That's bringing people here from all different places.
See, we hear that, you know, from all of our guests, the brokers, I mean, the lenders, whoever comes in here tells us that same story, that that's happening because people like it here. That's obviously for sure. Well, so much of this market, I think, is based upon, you know, low interest rates, because if you're selling $300,000-$400,000 homes, if you don't have a pretty good interest rate, you're not going to be able to afford that. Is that an accurate statement there? I mean, Guy?
It is pretty accurate. When I went to work where I work right now, our rates were lower than the place that I worked before, and I was literally, just by getting that little bit in rate, kind of did the math, and it was about 5% in purchasing power on a $200,000 loan, just having an eighth to a quarter lower in rate. So just kind of dependent on the circumstances. But yeah, rates can definitely have a huge factor in how much you can borrow.
You know, they've always, what's so weird about this one, if you go back in time and look, in 81, and during that recession time there, interest rates were in the 16% range. When this recession hit, everything dropped. Because they were higher. They were in the 6 and 7% range prior to 2007. You know that?
Price were you buying homes at that time, though?
What, when I bought mine?
Yeah.
I paid 12.5% for the first house that I bought, but my first house cost less than my truck did. You know, so I mean, I don't even think it's comparing in the same thing. Yeah. It's crazy.
26% was a record for anybody that ever came through my doors, and that's the rate that he had back in the 80s. And I don't know how he got that horrible rate, but that was, I'll never forget that when he came in and told me about
26%. Wow. That's a pretty high one there.
I'm not going to see Guido before I sign up for that one.
And that was probably about the time I was apologizing for 6% rates. You know. And
I know you do a lot of VA loans, and you're very proud of that.
We do. I've dealt with three veterans this morning already before I even came in here. So yeah, there are a ton of veterans around. I don't know how I kind of became the VA guy, but I feel pretty blessed to be working with them. I love helping them.
Well, probably a lot of that's word of mouth. It's referrals. It's the same kind of thing the real estate businesses are built on. It's that kind of thing. You're providing good service. If you give them the loans, they're going to come back, right?
Veterans come and see you, and they move into new homes that they own. That's a good deal. I'd come see you if I was a veteran.
My job. Cool.
Can veterans, like my son has a VA loan, his first house down in Texas, and he's going to get another house. So he can sell that and get another VA loan, right?
Yeah.
But he can't keep that house and get another VA loan, can you?
Technically, you can, but what you get is you get a $36,000 kind of a guarantee. So that's the reason that you do not have to pay mortgage insurance, and you can have 100% financing on a VA loan.
Okay.
So whatever of that guarantee is used up, that's just gone until you sell that house. So that's one thing you have to be careful of. A lot of people talk about VA loans being assumable, which they are to another veteran. The issue that you have to worry about is if your entitlement's gone, then it's gone up until that house sells. So you got this other person enjoying this 3.25% rate for the next 30 years because they assumed yours, and then you're stuck, not being able to do your VA loan again
until that's fixed, right?
Yes, until that loan's paid off.
Until the loan is paid off.
Yes. So technically you can have more than one, but you just have whatever is left in that guarantee. In that entitlement. So
one of the things we would want to share with you today is what are the first steps that you take that we need to talk about when you thinking about I'm going to buy a house now. Whether you're a first-time home buyer or whatever it is, you gotta think about the steps along the way. And it's different from a lender's viewpoint as a real estate broker's viewpoint, like Cheryl can say. So Cheryl, someone calls you and say, I want to buy a house. I've never done it before, whatever. How are we going to start people on this process? Because so many, and I find this true, so many, we think that people know what to do. Isn't that true? We all think that, people know a little bit because we do it every day. But that's not the case. And so people really are saying, I don't even know where to start. All right, take it from there. What do you do?
Well, the first thing that I have them do is contact a lender so that they can get pre-approved for several reasons. And we know that we're looking in the right price range. We know what type of loan they're going to be getting because when we go out and look at properties, some properties, the condition of the property will negate what type of loan they can get. So if they're getting VA, then, the property has to be in better condition than something that maybe if they're getting conventional financing is a little bit more forgiving on the, the peeling paint and different issues like that. So that's first and foremost. But they just say, show me houses. They're like, no, we need to know what we're looking for so that, you're not disappointed to go out and see a bunch of houses that you can't get or don't qualify in your price range or type of loan.
Yeah, there's nothing worse than showing somebody property that they can't qualify for or not going to get because they may like it and then, it's not good, right? It's not a good situation.
The worst thing is they're going to love it. Not like it.
Oh, you're right. Yeah. They're going to love it too much, and they can't get it.
And then it's going to be well out of their reach, and they're going to go, you know what? You're not a very good realtor.
All right. Yeah. Show me the wrong types of property. Okay. Step 2, then. Then what do you do?
Well, after we know what price range and what type of loan we're looking for, then we set them up on a search that does meet their needs so that then they're looking at properties and then they'll look at a lot of stuff on the internet. And what we try to explain to them is that they look different in person as opposed to the pictures. So it's really good that they get out and actually see them so that their expectations are a little bit more realistic as far as what they're getting.
One of the things that, and I'm curious as to what Guy's comment is about this, I get lots and lots of calls from buyers off of Zillow. Okay. I mean, I didn't, as a consumer, I'm not a consumer, so I'm a real estate broker, so I don't go on Zillow as much as obviously lots of people do. But they have their Zillow Zestimate on there, and it's a value that is just, it throws buyers and sellers off is my point.
I think the main thing that I see about the Zillow stuff, and the Zillow is a great place to go look at some pictures of a house.
It is.
But beyond that, they could be anywhere from 20 to 50% off on their values, especially down in Texas where they don't really report things so much. You could be as much as 50% off. We're probably closer to 20 around here. I I can't say for sure, but I think the other piece that I deal with all the time is somebody comes in and they say, "Hey, I want this $200,000 house. I saw it on Zillow. Oh, great. Well, it says my payment's going to be $700."
Oh, okay.
Well,
Yeah, okay.
That's great if you have 20% down and they're just factoring in, a decent rate. And again, they're not figuring in taxes, they're not figuring in insurance, or if they have less than 20% down, the mortgage insurance that goes into the house
kicks into that. Yeah.
So that's the big thing. I mean, I've gone to Zillow to look at pictures because I'm kind of a mere mortal. I'm not one of you real estate agents that and that's why it's so important to call one of these guys or Cheryl or somebody about looking up a house, because you guys get a lot more information through the MLS than we'll ever be able to see as just normal people.
As comparison more, we can easier do that, right, Cheryl?
Oh, yeah, absolutely. And go ahead and look up the history and see how many price reductions they have, maybe how motivated the seller might be, and just give a little insight when we go and look at it. We have more information for sure.
Yeah. Well, I mean, I like having, Joe, the Zillows that are out there. I mean, Zillow and Trulia, they merged and stuff. But Zillow is a big player in the real estate market. I mean, I think, and growing. People go there to it.
It's a great example of how the real estate market has changed in the favor of the buyers and accessibility to information and getting online and getting to properties. I mean, the National Association of Realtors has a website that's really coming to the fore now. I think is providing some great information that's probably more accurately based than some of the others, but it's the information age, and there's so much information out there, and finding someone that can guide you through that and help you filter what that information is, where it comes from, because my good friend Dan that we talked to just the other day, he searches high, low, far, and wide all over those places, and then brings them to me, and then I try to kind of boil it down and find out what we really got on our hands. But consumers have so much more information at their fingertips in the blink of an eye than we ever had before. It's totally changed the game.
Yeah, well, don't believe one thing that you see.
Get a professional
okay, but
opinion and advice.
As a real estate broker, you can actually take that Zillow thing and take it off of your listing, I believe. Which I think maybe a lot of brokers should do that, because it's really off and it throws a lot of people off. Anyway, that's my point there. All right.
I definitely get some. You'll have a guy that missed a payment, a few years ago or a year and a half ago, and it'll show up kind of as a foreclosure sometime on there, and then or sometimes, and so that's kind of tough too, just kind of weeding through some of the misinformation. But I mean, it's not a bad way to get on and be able to see some stuff. Yeah.
Well, I've been doing this 30 years. Back in the day, we used to carry around those little books with the little 1-inch black and white pictures, and we had to go and preview all of the properties for our clients.
That's
but
right.
By the time they end up calling me, they're so well educated by going through Zillow and Trulia and Realtor.com and a lot of these other sites. They just educate themselves, and they know a lot more and are more familiar. They're able to look at the pictures, the aerial views, get the history. They know more about what the seller paid for it when they call me than wait a minute, I got to look that up.
They know more than we do.
Exactly.
You just start this thing. But don't you love buyers who do that?
Oh, I do.
Oh my goodness, it's great.
Yeah, I love it because they're, like I said, they're more prepared than they used to be in the past.
Yeah, absolutely. All right.
Well, I was just thinking about a house today that I got a call on, and I just happen to know about this house. I try to stay out of the real estate. I let you professionals do that side of thing. I just deal with the numbers. But I had a guy call in today on a house that I know for a fact that there are no permits on, period. I mean, I don't think there's one for anything on this house. And I've just gotten so many phone calls over the last few months, people, just interested in this one particular property. I'll see them from the store to wherever, that I just got familiar with this one property. And that's one of the big things. You could look up all you want online, but having a good agent there that's willing to go pull permits, look at things and make sure they're ready to buy. They can recognize, like Cheryl was talking about earlier, hey, this house has got a little bit of peeling paint. It might go conventional, but it's not going to go FHA. They're going to call that out all day long. So, the well and septic tests that need to be done for different loans, I don't know. There's just a ton of things that go into it. So all you can get online, there's some good things. And but
to Cheryl's point real quickly, those buyers have more time. When we get a few deals going, or in Cheryl's case, numbers of deals going, the individual agent can't put that much time into the research and into the delving into all of that the buyer, who is really the motivated party, can do. It makes for a better team between ourselves and our buyers when they arm themselves with that information as best they can, then come and bounce it off of us and work together with us with their good knowledge coming to the table.
What's the next step out of that thing that you go through? I mean, Cheryl sent someone to you. What do I need to take to you? What should I be saving right now to be able to get that loan, to get that pre-approval from you that says I can go, okay, Cheryl, let's go look at some properties then?
Well, it's probably going to take more than the next 10 seconds we have, I think, left on this section for that, because there are a few different things.
Is it a lot now here you're talking about? Different stuff?
The big thing is you got to get in and we have to look at your credit.
Credit's the number one thing, isn't it? That's the number one thing for a loan, right? It's credit.
It really
credit
is. And
score.
and hopefully you have some sort of a down payment saved up, unless you're a veteran.
Yeah.
And then that goes deeper too. I hear the music.
Yeah,
so
the down payment, all those kind of things you got to have. It's not a simple process. That's why you need help to do it, right? That's what we're here for.
But the benefits in the long run are very much in your favor.
They certainly are. The Real Estate Show got a break coming up here. We're with Guy Giles and Cheryl Malone today on the Real Estate Show. We're coming right back. Got more to share for you here on KMED. The Real Estate Show rolls on KMED, September the 24th of 2016, where fall is underway, football season underway, school's underway, lots of activity going on, certainly all around the Rogue Valley, and that includes the real estate market and real estate sales. In August, just think of August. We haven't the latest stats that we haven't got September's yet, but in August, think of that, pending sales were up like 33% over August of 2015. But the other problem is that the listings were only up like 10%. They were up for the first time in a while. But Cheryl Malone of Windermere Van Vliet's with us here today on the Real Estate Show, along with Guy Giles. Cheryl, that gap continues to go. We're selling more than we're getting in to sell, right? It just continues.
Yeah, absolutely. A lot of the people were waiting for the market to recover so that they could, kind of sell at least and break even and move on to wherever it is that they wanted to go. And now it seems like they're just sitting on it, even though we've kind of recovered. They're just waiting and waiting and waiting for the market to, it's continually going up because of the demand. But
one of the things happening is you can't buy it because the inventory is low. You can't find what you want. Say you want to sell your house, you want to move up or whatever. Or right size or whatever. I mean, there's all different things. That is hard. If you can't find something, you can't sell yours because, you're getting contingent sales and things like that. And that kind of throws what do they call that thing? Throws a monkey wrench into the whole deal. Yeah. Anyway, we're talking with Guy Giles from Bank 34 Mortgage. Guy's our resident lending expert here on our Real Estate Show. And okay, you're talking about, steps to go. You started to do that. I want to make sure that people, understand that. But again, you may know somebody. Say your situation is okay. You may know somebody who needs this help here, or some of this information. So, what are those steps? I'm coming to you, Guy, and I'm going to say I want to do this. And how am I going to get a pre-approval letter from you? What do I need to do to get it?
First thing, get a stool sample together, because we are going to check everything about you these days. But the big thing, you talk about monkey wrenches. The hardest part is when somebody comes to me with a contract in hand and their agent sent them over and they're ready to go, but they haven't talked to a lender, haven't talked to me yet, and then all of a sudden I pull their credit and they say, well, I know my credit's a 730 because Credit Karma told me so. But what people don't realize is that if you have a dispute on your credit, you can't close a mortgage loan with a dispute on there. So once you remove that, what it effectively does, if you dispute, and it's not necessarily bad to dispute something that's wrong on your credit, but if you throw a dispute on there before you do a home loan, it's going to artificially raise your credit score up because it makes it invisible to the rest of the world.
Define dispute.
So if you don't think that you owe a bill, and then
just a regular bill that you're disputing.
Yeah,
wow.
If you just throw a regular dispute on there, just some of the new laws that had changed, they make it look like it's never even been there, but it still will have to be addressed. Maybe you owe it, maybe you don't. But one way or another, we're not allowed to close a loan with a dispute on there. So we have to pull it off, and we have to figure out what exactly we're going to do with your credit. And I guess where I'm going with that is you don't want to address that on the day that you wrote a purchase contract, or heaven forbid 5 days after that.
All right. Let me ask Cheryl something here, because the real estate agreement, I'm sure I got this right. The real estate agreement, you can actually make an offer, right? Because there's a line in there that say you will apply for a loan within so many business days after acceptance, correct?
That's correct. Yeah.
Yeah.
There's also a section there that talks about whether you're supplying a pre-approval letter with the offer. And most sellers or agents are not going to really accept your offer until you provide that proof of pre-qualification based on the offer that in hand.
So our little point here is that if you have somebody who's saying we can write this up and then we're going to go get a loan, that's a red flags probably everywhere, isn't it? You should not do that. I mean, I've never done that myself. I've never done that either. I wouldn't do that.
Right, and it's also important that you go to the right lender. I mean, I had a situation not too long ago where somebody got a pre-approval letter from an institution, and it ended up we were 7 days into the contract, ready to do home inspections, and found out that they didn't qualify really. So what I enjoy about mortgage brokers and people that's all they do are mortgages. That's their specialty. They know, the flags and the different scenarios to really look at before they give you that pre-approval letter. So
yeah, because a pre-approval letter, you got to have it. Okay, we've talked about credit and disputed. You don't want to have any disputes on your credit scores today. What do people have to get the rates that we talked about here?
Well, I mean, it's like on a VA loan. I had this conversation earlier today with somebody. Somebody was telling them that they had to have a 640 credit score. They were trying to help them get their 640 credit score before they could do a VA loan for them. And the reality is that the VA does not have a minimum credit score. That doesn't mean you want to try to do a VA loan with a 580 credit score, because you're going to get a better deal, the better you can go, or, the higher you can get. And usually there's a reason if your credit score is that low. And then that might go into what we were talking about a little bit earlier, as far as just something on your credit that you want to address.
Now what do buyers face, Guy, who have a lot of student debt? Does that make any difference in are you seeing that in loans that you're kind of working on, or is that not coming through yet? Because it will be at some point, or if it's not now.
I heard some statistics the other day. I can't articulate one word this afternoon for some reason, or actually this morning. It'll be Saturday. Yeah. But anyway, as far as how much student loans are actually out there. So in the past, if they were deferred, you didn't necessarily have to count them against people. So they're changing a lot of those rules to where, you have to do it. And you
have to count that as part of a credit score.
Yeah, so it is something to be careful of. If you can avoid a whole bunch of student loans. I had one guy with over $650,000 in student loans one time. That, it was a nightmare, and he wasn't a doctor or a lawyer.
Wow.
So you can definitely get into it. So yeah, we look at pretty much everything. If you have a lease on a car, if you've co-signed for somebody for their student loans.
Oh yeah.
You have to. We're in kind of a full doc world right now. We're documenting everything from A to Z.
I always remind you. You brought that up about co-signing, and I always really caution everybody: don't co-sign as much as you may want to. Co-sign student loans for your children. Don't co-sign deeds. You want to sign your property over to your children or add them to your deed. Be very careful about that. I mean, I talked with a woman this week, in fact, a guy who's done that, and now is vulnerable because the other party is now the other party can do a lot of things with that other half of that house and things like that. Be very careful about those things, folks. That's really, really important.
Yeah, and it is important to get in and come up with a plan, because I had a friend of mine, a guy that I've done. He's a local contractor. I'd done a couple loans for in the past, that wanted to go in thirds with a couple of people on a property, and that gets into something really weird. 4 years down the road, one of the guys wants to move something, he needs off that thing. Can the other two qualify for that place without him to buy him out? And you do have to be careful when you're commingling all that with everybody.
You really do. Okay, what else we got going here to those first steps to finally get that pre-approval letter, and let's go look at properties?
Well, I mean, there's two sides to it. So there's the side of the lending. Like I said, the first thing you'll want to do is we'll come in, we'll look at your credit. It's a good thing to come in. We talked about a pre-approval letter. There's a difference between a pre-qualification and a pre-approval also.
Yeah.
So if you come in and you just kind of tell me, hey, I make $800,000 a year and I pulled your credit and that seems to be okay, that's one thing. And then you get all their documentation in there and you find out that they're self-employed, and their business grossed $800,000, but by the time they got done trying to get out of paying taxes, they're negative $40,000. So, it's just a really good thing to come in to meet. And what I like to do with people is do a full pre-qualification. And, we're a bank that has time. We we have underwriters and we have people that will go through and fully credit underwrite you. And then once that underwriter signs off on you, a pre-qualification isn't as strong as a full credit pre-approval. That it goes back to that very same underwriter at my bank. So when that person signed off on it, they're going to sign off on it for that next time also. So you know that you're 100% good. And I think that could be the difference on a low inventory of getting a house or not.
I wonder if, Cheryl, on a low, if you had two people bidding, or two people, going off for a property, one had a pre-approval letter, one had a pre-qualification letter, then the pre-approval letter would probably be obviously the better take, wouldn't it?
Oh, absolutely, yes.
Yeah.
A lot less risk involved as far as these unknowns. I was going to say, a lot of people, they think get pre-qual or is a lengthy, hard process. Like he says, you can just go in for a half hour and talk about your income and your some of your qualifications and really know where you stand.
Yeah, it's documentation, right? That's what we need, documentation here to do this. And we'll talk about that when we come back here. We're with Guy Giles from Bank 34 Mortgage and Cheryl Malone from Windermere Van Vliet today on the Real Estate Show, talking about steps you take to get those pre-approval letter. We're coming right back on the Real Estate Show right after this. Real Estate Show continues here on KMED this Saturday, the 24th of September. Glad you joined us here on KMED for our show today. Lots. I got to say one thing, that I was reading, Joe goes to a lot of those, planning commission meetings, but one of the most interesting topics right now around is these guard towers or camera towers that people want to build to guard these recreational marijuana grows. Like, have you read about that? 30-foot towers with this and that. I hope that does not happen. That would absolutely, it's just crazy. I think that would be stupid. But anyway, they're talking about that. I mean, it's one of the issues that is out there with that stuff. And so, it just continues on. It seems like week after week. Today here on the show, we're with Guy Giles from Bank 34 Mortgage and Cheryl Malone from Windermere Van Vliet here on the Real Estate Show, talking interest rates that continue to be absolutely amazingly low for you. That's for sure. No matter whether you're looking VA loans, government loans, or regular conventional loans. That's the thing that surprised me the most, Guy, over the time here of our show is FHA at one time was like the thing. Everybody was after getting FHA loans. Now that's kind of switched and it's back to the conventional world.
Yeah, if your credit's not good at all, it's still a viable option because the mortgage insurance on it doesn't really vary like it does on a conventional loan. Yeah. So the credit score plays into it a lot more on a regular one. So we're still doing FHA loans. The USDAs around here are pretty much gone though.
Yeah.
But if you can save a little bit of a down payment and go conventional, it's not a bad route to go.
Not a bad route to go. Cheryl, what do you take? One of the things I think is important is people got to get in the game. It's like getting your first job. Everybody tells you got to get your foot in the door. I think real estate's almost the same way, isn't that? You got to take that leap. You got to do that. You got to finally do that because it generates so much for you, right?
Oh, you're investing in your future. Social Security, we're not sure exactly how much longer that's going to be around for these younger kids. And what I would really, try to talk to my buyers about is, your first house doesn't have to be your dream home. Just get into something, if you pay, $2,000 a month rent for 1 year, that's $24,000 you've just kind of wasted. You got no benefit, no nothing from it. Mm-hmm. And that's a down payment on a house. So, try to get into something, get your foot in the door, live there 3 to 5 years. You'll gain some equity. You can refinance, pull some equity out of there, go buy the house that you really want, or save up another down payment. What's nice is that, you can get conventional financing at 5% down as opposed to when I first started in this business, it was 20% down. Mm-hmm. And so you can still have the benefits of a conventional loan with the no mortgage insurance that will go away down the road. And, basically buy a rental at owner-occupied rates at this point, save up a little bit money, 5% down, 3 to 5 years, go buy yourself the house you really want, and you've got an investment property at 3.5% interest for the next 30 years.
Mm-hmm. Now, you've done that. I mean, I know your little story behind you, but you've done this a lot, haven't you?
Oh, yeah, absolutely. I bought my first house when I was 24 years old, and I own it free and clear now, and that's my retirement. I mean, that's just one of many that I have that will provide me income, whenever I want it.
Yeah, I know friends in the media over the years, and very few ever owned real estate, and yet the few who have, wherever they've traveled and moved, they've always bought a place and they've always done. They gained equity, gained something, earned some money, made some money, moved to the next place, and have done the same thing. So there's lots of really opportunities and ways for people to get into the game in different ways. I mean, you can do it you don't have to do it the way we just talked about it, but your own way, right?
Right, absolutely. And what people don't realize is they say, well, we'll wait, we'll wait for this, we'll wait a few more months, we'll wait till next spring. Well, prices are going to change. And if the interest rates change, 0.5% or something, that could cause you thousands of dollars more that you would have had paid out over the course of 30 years. And let's say you do keep it as a rental, that's, I don't know, $5,000, $10,000 could be extra that you paid just by waiting, 3 or 4 months. And people don't realize the change in interest rate or, appreciation in the property values, and a change in the interest rate could cost you $20,000 by waiting 3 or 6 months.
It seems that people are seeing that gosh, the demand here is so high, and I don't see the demand slowing down much. I mean, the winter's coming up, I understand that, but the demand, I don't think, is going to slow down. Do you, Cheryl? Do you, Guy? I mean, it seems that this is we've been discovered again, and people want to come here for
absolutely.
all sorts of reasons.
Well, I think actually winter is the best time to be buying because you have the people that are selling right now are selling because they have to. They're not just throwing it out there to see what they can get. They don't want to, a lot of the buyers, the sellers, they don't want to be bothered during the holidays, and they want to show it when it's spring and everything looks really pretty. But the people that are selling right now are pretty serious sellers that need to sell. So I think, you're going to get more realistic prices now than you would be waiting for the spring when there'll be probably a little inflated.
Yeah, sellers have, sellers always think a lot of times that their properties are worth more than they are, but in this kind of a market, but it's a seller's market. And of course, as long as that inventory stays, that we're still selling more than we're gaining in the inventory. It's going to be that way, and I think I don't think it's going to change. It hasn't changed now for almost 2 years.
Right, it's a seller's market, but there's still the people they're not getting what they think they should get if it's not worth that, because the appraisals are coming in low. I mean, they're not overinflating the prices by having these outrageous sales prices get out of control, which is nice. The appraisers are keeping them at bay. My
favorite lines are when someone says to you, well, I want to sell my house. I'm like, I want this price for it. Some Californian is going to come up here and pay this, and they have cash. They have cash. They're going to pay this, And I say, well, but they're not going to overpay for a property if you have cash or not. I mean, people aren't stupid, so you got to continue to keep that in mind. Okay, Guy, this list coming up. When we talk to you next month, tell me what it's going to be going on, you think?
Oh, probably still just people moving here. I was thinking about that just now while you guys were talking. I've talked to everybody from Virginia today to San Diego, and one up in Washington. I mean, they're just coming from all over. It's just one of these cool places. I was thinking also just now about my daughter and Josh, her boyfriend. They were born in the same hospital here within 24 hours of each other today. So happy birthday, you guys. But on a side note, everybody's coming here. I don't think I'm going to be really telling a different story.
Yeah, well, I had a couple call me from California. Again, they say, we're retiring in a few years. We want to buy now and then come up here and use it as a rental for a while and things like that. So that's out there. I mean, there's all this activity going on. And you're going to be busy, that's for sure. And and that's a good thing.
We're feeling blessed.
I think. Yeah. All right, Cheryl. Same way with you. It's kind of fall time. I can't wait to see what happens. I can't wait to see the stats because there's a lot of activity going on. I've never seen it like this in my 10 years of doing this.
Right. Yeah, it's really good though because I think it's growing at a decent rate, but not out of control. Like down in California, I hear people, they put their house on the market and they leave for 4 days and then they come back and look at 20 offers in some of the locations down there. So that's a little bit craziness. We don't want that to happen here.
Yeah, we don't want the double-digit increases in values to go. And I don't think that's happened this year, though. We'll find out a little bit later on. All right, Guy Giles, nice to visit with you. You can
Thank you.
Just Google him at Guy Giles, Bank 34 Mortgage. he'll be able to help you out on any kind of loan that you need. Cheryl Malone, nice to visit with you as well, and good luck to you. That'll do it for the Real Estate Show today on KMED. For Pete and Joe, hey, you have a great weekend. Visit us online at realestateshowOregon.com. We'll see you next Saturday right here at KMED.
To the Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshowOregon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.